So welcome guys to part 2 of this market structure trading course. If you guys haven't watched part 1 yet, I do highly recommend that you watch that video before you watch this one. I will make sure to link that video both up in the video card as well as in the description below. Because if you want to get the most out of this video and this course as a whole, the concepts from chapter 1 is very important to understand. But now guys, let's get this video going, and I want to start here by talking about probably the most important concept in technical analysis, and that is to understand trends and the market structure of trends. As you probably know, the market can be in an uptrend, we can be in a downtrend, the market can also go sideways, or in other words, we can be in a trading range. And on the surface, uptrends and downtrends feels pretty simple. You know, an uptrend is when the price goes up, obviously, and a downtrend is when the price goes down. But if it really was that easy, then you know all traders would make money. But in reality, most traders actually lose. And I personally think a huge reason for that is that many beginner traders doesn't take the time to truly master market structure. So now let's start by taking a look at the uptrend here. And this chapter I will start with the very basics, but then we will move on to more advanced but very important concepts. So if you open up a textbook on uptrends, an uptrend will usually look like this. We have, you know, straight lines and beautiful moves that sort of shows a perfect uptrend. But in reality, the market, as you probably know if you have been trading for a while or if you have been trying to trade, in reality, the markets often look more something like this, and they are much harder to read. So what we need here is that we need some specific rules. We need a framework to first of all determine if we are in an uptrend or not, and we need rules to determine when is an uptrend about to end, and so on and so on. But let's start here by taking a look at the very basics of an uptrend, and let's take a look at this textbook example right here. So in order to have an uptrend, we simply need two things. We need to first print higher lows, and we need to print consecutive higher lows. So right here we have 3 consecutive higher lows, but what we also need to see is that we need to print consecutive higher highs. So in order to have an uptrend, we need to have both higher lows and higher highs. We can't, for example, have something that looks like this when we have higher highs but lows at the same level. This right here is not an uptrend. We need both higher highs and higher lows to print an uptrend. And as you guys know from chapter 1, the moves that goes in the same direction as the trend, like this move right here, is what we call an impulsive move or a trend leg, and the moves that goes in the opposite direction, or sometimes they are pretty flat, this is what we call a pullback or retracement. But as I said guys, in reality, trends often looks way more complicated. So here we need a framework to determine where are the highs and where are the lows. So for example, how do we know that this right here is a high or this one right here is a high? How do we know that this is a low or that this is a low? Well, first of all, in order to maintain an uptrend, the price needs to break above the previous high. So this right here is a high, and the point where we broke the high is right here. And the main low of the uptrend is determined from the move that caused the break of the high. So you look back here to the move that caused the break, which is this low right here. And this right here will be what we call the major low. And this is a very important point on the chart, because if the price goes down and breaks below this major point, we are no longer in an uptrend. So this is a key level. And then the highest point of the move that broke the previous high, so broke this point right here, this becomes our new high. So this right here is the point that the trend needs to break in order to maintain the uptrend. And remember, how do we determine our low? Well, in order to determine that, we look at the move that broke the structure. We go back here and we can see that this point right here is the low. So this point right here is our new major low. The next highest point of the move that broke structure is this point right here. So in order to maintain the uptrend, once again, we need to break this point. And in order to find the low, we trace back the price and we find our low right here. So our lows for this uptrend is right here, and right here. And the highs is right here, and right here. And as we can see, if we just change the color of this trend right here, we can actually see that if we drag this trend just over the textbook example, we can see that they look exactly the same, but the purple trend here is simply put a more realistic example of how the price moves in reality. So now let's take a look at a real chart. And what I want you guys to do here is to try to find the highs and the lows of this uptrend yourself. And please don't worry if you get this wrong. I will actually be super impressed if you can do this on the first try. But if you guys want to, pause the video right here and do the exercise. Alright, so let's take a look at this uptrend right here. First of all, we can notice that the price broke a key level with this first move to the upside right here. So we can mark this as our first low. Why? Because this is the lowest point of the move that broke structure. So this right here is the move that broke structure, and this right here is the lowest point. Then the price pushes all the way up to this point right here, and then the price pulls back. And if we actually zoom into the shorter time frames, we can actually notice that this is almost looking like an ascending triangle. That's something you can notice if you zoom into the shorter term time frames. But first of all, we notice that this right here is our high. And if you are now curious, how can we know that this right here is our high? Well, very soon I will talk about some step-by-step rules here we can use to help us find these key high points. But for now, let's just notice that that is our high. So what this means is that the trend, remember, we need to break this high in order to maintain the uptrend. And when did we break this high? Well, this massive bullish candle right here broke above. So after this point, we are maintaining the uptrend. And our new low becomes this low right here. So this right here is our new low point in the uptrend. Why? Well, we look back. What was the move that caused the break? Well, it was this move right here. And the lowest point of that move was right there. The price pushes up towards this point. So in order to maintain the uptrend, the price needs to push above this point, right? We take a look at the move that broke structure, and we can see that our low is this point right here. Once again, here we create a high, and here you can actually see something interesting. The price went up and shortly tested this high with a candlestick wick. This was like a small liquidity grab, but for me, when we see a move like this, when the price just quickly wick above, this is no break for me. I want to see a candle close above the structure. Some traders actually sees the wick as a real break, but for me, I'm looking out for the candle closes above level. So when did the price close above this level? Well, it was with this candle right here, right? So what is our new low? Well, our new low is this point right here. And then we see a strong impulsive move up to this point, and this right here is our next high. So now let's look a bit to the left here and take a look here. So remember, this right here was our key low. So when or if the price breaks below this point, then we are no longer in an uptrend, right? So remember, we printed a high right here. And as you guys can see, we have some minor highs here, we have some minor highs here, but these are not that important for the longer term trend. What we are focusing on is this point right here, because if we break below this point, we are no longer in an uptrend. So for the long term uptrend, it doesn't matter too much how the price behaves at this point right here. Of course, by analyzing the short-term price and minor structure, we can get even more information. But in order for the long-term uptrend to be invalidated, the price needs to break below. And when did the price break below? Well, we can see that with this candle right here, the price got a strong candle close below this point, and now we are no longer in an uptrend. And now you guys might be curious, how can we determine that, for example, that this point right here was a high and that we had a move like this instead? Why couldn't this right here be our first high, and so on and so on? And to determine the key high points in an uptrend, and here different traders tend to use slightly different rules. Some traders might use a rule that says that when we see two candlesticks that goes in the opposite direction of the impulsive move, then we know that we have a high. While some traders will use something called pivot highs and pivot lows. And to show this, we can actually open up an indicator. We have an indicator that is simply called pivot points high low right here. And let's change the settings. So we have a magnitude of 2 right here. So, and let's press OK. So now you can see that we have, some specific points appearing here on the chart. And one very interesting thing you will notice is that the high and low points we identified manually will often be pivot points high and low. And what do I mean by a pivot point with magnitude 2? Well, a pivot point of order 2 basically means that this point right here needs to have 2 lower high candles to the left and 2 lower high candles to the right. And while these pivot points will often mark the key structure levels here on the chart, what you also will notice that we will have some false or insignificant points. For example, this point right here, not significant. This point right here, not significant. And in my opinion, this point right here, also not significant. These points are often significant when we zoom into the shorter time frame, but in the broader perspective, when identifying trades here on the trading time frame, the pivot point method will produce some false signals. So I think it's very important that you don't try to rely on indicators for market structure. It's much better to be able to mark market structure correctly. So the method I'm using here, let me actually delete the pivot point indicator. So what I prefer to do here is that I simply look at the character of the price movement. So for example, if you look at this impulsive move right here, we can clearly see, even a beginner can see that this is a clear move towards the upside. But during this part right here, let me actually delete some stuff so it's more clear. During this point right here, we can clearly see a change in the character of the price movement. So for me, this is clear that we are having, a high right here. Once again, this part right here is a clear movement towards the upside, while this part right here is a clear change in the character of the price movement. So this right here becomes the high. Once again, we see a clear move towards the upside, clear character shift, so we mark the high right there, and so on and so on. So now let's switch the attention here and take a look at the market structure of a downtrend. And once again, we will start by taking a look at the textbook example, but we will also, of course, take a look at a realistic example and also how to mark downtrend market structure in real markets as well. But let's start here with the basics. So a downtrend is basically the opposite of an uptrend. In order to have a downtrend, we need to print consecutive lower highs, right? And we also need to print lower lows. However, in real life, we will very seldom find beautiful downtrends like right here. Most of the time, unfortunately, the real markets looks something more like this. But the rules here are the same. We start by seeing an impulsive move here towards the downside, and the lowest point of this move is our major low. So it's this point right here that the market needs to break below in order to continue the downtrend. As we can see right here, the market broke below, and in order to find the high, we basically take a look at the high of the move that caused the break. So this point right here is the high. So after this break, the market could go all the way up here, but as long as we don't break this point right here, we are still in a downtrend. To find the next low, we take a look at the lowest point of the impulsive move towards the downside. So this is the new point the market needs to break in order to maintain the uptrend, and we can see that we broke it right here, making this our new important high that the market needs to break above in order to break out of the downtrend. So now let's jump into the real market and mark up the structure of this downtrend right here. And for this one, I chose a pretty hard example on purpose, but still, if you want to, as an exercise, I want you guys to find the highs and the lows of this market structure. Because in order to learn quicker, and market structure will take some time to learn, but in order to progress faster, it's super important to do practical examples yourself. So pause the video right here and try to mark the structure. Alright, so first of all, the downtrend starts with this high right here. But we can see that the first sort of impulsive move is, at least in my opinion, very hard to analyze. You may wonder, is this right here the low? Is this right here the low? Or is this right here the low? And in this particular example, remember from the uptrend example, what I'm looking out for is a change in the character of the price. And if we use the pivot point method, so let me just show you guys, let's open up the pivot point high-low once again with a magnitude of 2 here, or order 2, we can actually notice here that all of these points I marked up are actually considered pivot points. And all of these points right here are also considered highs. So in my opinion, it would definitely not be wrong to see this trend as something like this, right? However, when looking at market structure, I find that having these very small movements on the chart can actually often lead to over-analyzing the chart, which in turn can lead to worse trading decisions and inevitably losing more money than necessary. So how I would mark this chart, for me, the most clear change in the character is this low right here. One could argue that these two are valid low points. I'm not saying no to that, but this is how I would mark the structure. I would see this as the most clear change in the character of the impulse move down. So I would see this right here as the first high and this right here as the first major low. So in order to maintain the downtrend, this point right here is the point we need to break. And as you can see, when we broke this point, we actually saw a massive move towards the downside. And this can actually give you a hint that perhaps this actually was the most important point, because we saw such a strong, reaction when the price broke below. But remember, how do we now mark the high? Well, the high is the highest point of the move that broke below. So the high is right there, and for this, in this case, we can see that the low is super clear. We saw a massive low of this move down, and this one is not really debatable. We have a super clear low. Then for a while the price went sideways, just consolidating here. But remember that as long as the trend is below this point right here, we are still in a downtrend. So the price went up and down for a while here. And in order to continue the downtrend, what is the point we need to break? Well, in order to maintain the downtrend, we need to break this point right here. I'm sorry, this is not a perfect line, but as you can see, we broke this point around here. So in order to find our next key high, we look at the high point of the move that caused the break. So this right here is our high. We went down here and printed a low. So this right here is the low. So it is this point we need to break in order to maintain the uptrend. Let me delete some stuff. It's a bit messy right here. We need to break this point. We clearly broke this point right here, and we trace back to the high of the move that broke that point, and that is this high right here. So as long as we don't break this point, we are still in a downtrend. And this was actually a very interesting example, because the price went up and tried to break this point 2 times right here. And if we look even more left here, we can see that we actually tested this level multiple times as resistance. So this just demonstrates how important market structure is. The price went up not only 1 time, 2 time, 3 time, trying to break out of the downtrend, but at this point we are still in a downtrend until this point right here, when we finally broke up above the downtrend. So now let's talk about 2 important concepts that you will hear a lot in the trading world, and that is break of structure, or for short BOS, and change of character, or for short SHoSH. And this might sound very complicated on the surface, but it's actually not that complicated. So let's use a simple example here and take a look at what is break of structure and what is change of character. So let's start by taking a look at break of structure. In very simple terms, a break of structure is when we break the structure of the existing trend. So for example, at this point right here, the price broke the previous high And in order to maintain an uptrend, we need to break and print a higher high. So this point right here is a break of structure because we break to a new high. The same thing right here. It is at this point, the price breaks above the previous high. So once again, we have a break of structure. Once again, even though the price right here just pushed slightly above, this was still a break of structure because the price still printed a higher high. On the other hand, a change of character happens when the price can no longer maintain the trend. So you can actually see at this point right here, the price broke below the major low. And in order to have an uptrend, we need to print higher highs and higher lows. So when we break below this point, we are no longer in an uptrend. So this right here is a change of character. And now I actually have a question for you guys. When we see a change of character, does that automatically mean that we switch from, for example, an uptrend to a downtrend or a downtrend to an uptrend? Well, it's actually not that simple. So if you take a look at this new chart, this point right here is still a change of character. Nothing has changed about this break because this one makes it so that we now have a low and then a lower low. However, at the same time, the price is now also printing one high right here and then a higher high. So now the price is printing both lower lows and higher highs. So right now the price is neither in an uptrend or downtrend. Right now the trend is undetermined. So now let's switch the attention and take a look at strong and weak highs and lows. And once again, this might in the beginning look, more complicated than it actually is. So first of all, a strong high or low is a low that breaks structure. So when we see a BOS or break of structure, the low that created that break of structure is a strong low. So for example, right here, I can mark it with an S. This right here is a strong low. Once again, this right here is also a strong low. Why is that a strong low? Well, because that move caused a break of structure. Once again, is this right here a strong low? Yes, it is a strong low because this right here was the move that broke structure. However, this point right here is a weak low. And why is this a weak low? Well, because the move from the low failed to break the structure, right? It failed to print a higher high and it failed to break structure. So that is why that right there is a weak low. And the opposite is of course true. So for example, this high right here is a weak high because it failed to break lower. Once again, this right here is a weak high because this move right here failed to break below this point. Once again, this right here is a weak high. However, right here we have a strong high because this is the high from a movement that broke structure. In this case, it was actually a change of character, but it still broke the low right here. And this right here is also a strong high because we saw a break of structure. So now let's dive a little bit deeper into the importance of major and minor market structure. So as you can see right now, I have a daily chart of Bitcoin to the left and I have a 4-hour chart of Bitcoin to the right. And in super simple terms, the main difference between major and minor market structure is what time frame you're looking at. So if you are a trader that trades on the daily chart, then the market structure here on the daily will be your major market structure. But if you zoom in here to the 4-hour chart, you will have your minor market structure on the 4-hour. And you definitely don't have to trade on the daily. You could have your 4-hour chart as your main time frame, and then perhaps the 1-hour chart is your minor. Or if you trade on, let's say you trade on the 15-minute time frame, then your minor time frame might be, 3-minute or 1-minute candles. But let's take a closer look here. So to the left, we can clearly see that the price is in a downtrend, right? We have our high right here, we have our low, then the price prints a lower high, and remember, to continue the downtrend we need to break below this point right here, and the Bitcoin price broke below right here and we printed a new lower low. So we can see on our main time frame we have a bearish market structure. We are currently in a downtrend. But no matter where on the chart you look, you will always be able to find smaller time frames when you zoom in. I talked about that in chapter 1 of this course, that markets are fractal. So patterns you find on the daily time frame, you will find on the 4-hour time frame, the 1-hour time frame, and so on and so on. So if we take a look at this daily time frame, we will actually notice that even though we see this as a single move towards the upside here on the daily, we will actually notice that this move itself will consist of very minor highs and lows. So we have high low, we have like a minor high, a minor low. We could argue that we have a minor high, minor low, and so on and so on. And to analyze the minor structure, it's often a very good idea to actually switch the time frame and zoom in. So here on the chart, you will notice that this part right here on the daily is exactly this part right here on the 4-hour time frame. And by analyzing the shorter term time frame, we can actually get much better entries. So as we can see here on the 4-hour, we can see that we are in a clear uptrend. How do we know that? Well, we can do our market structure analysis. We have our first low right here. We have our high right here, right? And in order to maintain the uptrend, we need to break above this high. The price broke above right here, making this right here our key low. We continue all the way up to the high of the move right here. So now to maintain the uptrend, we need to break above here. And we can see that the price broke above right here, making this our new low. Now the next point the price needs to break above is this point right here, and we can see that we just barely broke above right here, making this right here our new low. But as we can see, looking a bit left, we can see that the price, it went up, but eventually it broke below the key low. And what is this? Well, you guys know that this is a change of character. So here we see a minor change of character. But this can actually be very useful for us on our trading time frame, because we can see that our change of character actually appeared right here. And this can give us an edge on our trading time frame, because on the trading time frame, we know that the overall trend is down. And after this point right here, we also know that the minor structure also changed to a downtrend. So now we have both the major and minor structure aligning at the same time, making this right here a potentially great pullback trade. And if you guys watched chapter 1 of this course, you know exactly what type of signals to look out for to make your pullback trades even more likely to succeed. But by analyzing both major and minor structure, we can improve our pullback trades even further. But yeah guys, I think chapter 2 is coming to an end now. If you guys are interested in a chapter 3, I would love to make one. Please let me know down in the comments below if you want to see a chapter 3. I have tons of more things to talk about if you guys want to see it. So yeah, make sure to drop a comment down below, and if you want any specific subjects, also leave that in the comment. And also of course guys, if you have been enjoying the course so far, it's super awesome and helpful if you show that by dropping a like on the video. And also if you don't want to miss chapter 3 or any upcoming technical analysis education videos, don't hesitate to subscribe and hit that notification bell. When chapter 3 is out, I will make sure to display it on the screen right here. But until then guys, if you haven't already, make sure to watch chapter 1 of this course.